Hey, good evening. I'm Dan Fitzpatrick here at StockMarketMentor.com on Monday, June 9th, and I'm looking at Apple here. Stock split 7 for 1, so it's trading below $100, which is the first time it's done that in many years. And there was a lot of conjecture about selling, about this. Back in the day, used to be when a stock split 2 for 1 usually, sometimes 3 or 4 for 1. When it split, folks would be buying the split and it would just keep running. Then lately, over the last year or so, when these stocks have split, like MasterCard comes to mind, where it split 10 for 1, it still hasn't regained that level. Google split 2 for 1 back here in April, and it hasn't quite gained that level either. It's close to breaking out, but it hasn't quite gotten there. And so I think there are a lot of folks who were thinking that once the stock split, a lot of traders would be selling their stock, and that selling would push the price lower. And then you contrast that against the suggestion that perhaps retail traders are waiting to buy the stock because they can make a better case for buying a stock that's under $100 than they can buying a stock that's at $700. So anyway, those were the two. There's nothing different about the company, but those were the two opposing arguments. We look at the 5-minute chart. First of all, the stock's up $1.45 today, which doesn't seem like that much, but multiply that by 7 and you had a pretty good day in Apple. The thing that was interesting to me was on this 5-minute chart, you can see how right at the open, the stock started gyrating around a lot and then did sell off. But that sell off, look at the volume. Okay, this was some pretty big trading volume here on this green bar. You can't really see it. But then over the next two, when the stock did decline, the trading activity was lower. Okay, and then so we go all the way into the close. There, I've gone ahead and deleted or gotten rid of the aftermarket data, but you go all the way into the close, and the stock's actually been consolidating. Now, institutions would be what keeps this stock up. 2 million shares were traded just at 4 o'clock. Okay, that's not Jim Bob's trading fund. This is big money coming in, so you're still getting some buying coming in. What I would suggest you do is just stay long Apple. I don't even think you want to look at this chart. I think you want to look at this chart, because if you look at this, you can see how the stock is just trickling right up along the upper Bollinger Band, and I don't think it's going to be any time at all before the stock gets up above $100, which is right about where the high is. So I would stay long Apple. If you're not long Apple, frankly, I think you can still buy some. Don't just go pile in. But if the stock was going to sell off big, it would have sold off big today. It didn't do that. So stay long and strong. Keep a trailing stop, though, so you're not just sitting there like a fool if the stock happens to fall all the way back down to $80 or something. So, because remember, a $10 move from 93 down to 83 is the equivalent of a $70 move pre-split. So anyway, hope this helps on Apple. And members, the strategy session's all ready to go, so I want you to go check that out now.